Welcome to your essential guide for navigating the turbulent waters of a cryptocurrency bear market. If you're experiencing your first major market downturn, this presentation will provide you with the psychological tools, practical strategies, and perspective needed to not just weather the storm, but position yourself for long-term success. Our journey begins with understanding the market cycle and why it feels so painful. We'll explore emotional pitfalls and strategic opportunities that disciplined investors can leverage. By the end, you'll have a comprehensive framework for transforming market adversity into your greatest investment advantage. The psychology of a market cycle chart illustrates the emotional rollercoaster that every market experiences. Most investors who entered during the bull run have now experienced the painful transition from euphoria to anxiety, denial, and possibly panic. Understanding your location on this emotional map is the first step toward making rational decisions rather than emotionally driven ones. Bear markets are not just normal, they're essential for the long-term health of any market ecosystem. They serve as a natural correction mechanism that washes out unsustainable projects, tests resilience, and sets the foundation for the next sustainable growth cycle. Seeing your portfolio decline by 70–90% shouldn't be underestimated. Many first-time crypto investors experience symptoms similar to the stages of grief, denial, anger, bargaining, depression, and acceptance. Recognizing which stage you're experiencing can help you gain perspective and make prudent decisions based on temporary emotions. Panic selling is one of the most common and destructive emotional responses during a bear market. It's triggered by several psychological factors, including loss aversion and herd mentality. Understanding these can help you avoid the real cost of panic. Revenge trading occurs when an investor tries to quickly recoup losses through increasingly risky trades. This behavior is driven by the psychological need to get even with the market rather than making rational decisions. Breaking this cycle requires disciplined investing, not emotional reactions. Constantly monitoring cryptocurrency prices can develop into a genuine behavioral addiction through the dopamine-driven feedback loops that power social media addiction. Breaking this habit involves setting specific times for checking prices and finding non-crypto hobbies that provide positive stimulation. Bear markets provide the gift of time, allowing investors to accumulate assets at discounted prices. Historically, those who accumulate during bear markets have seen significant returns when the market recovers, making it a strategic opportunity for long-term growth. Dollar cost averaging, DCA, is the practice of investing a fixed amount at regular intervals, regardless of price. This strategy offers several psychological and financial benefits during bear markets, such as removing the emotional stress of trying to time the bottom and reducing the impact of volatility. Bear markets are ideal for studying blockchain fundamentals, consensus mechanisms, and the technical aspects of projects without the distraction of price speculation. This knowledge builds conviction and helps you make informed decisions when volatility returns. Bear markets reveal which projects are truly committed to their vision and which were merely riding the hype cycle. This creates a natural selection process that benefits long-term investors who focus on projects that continue to innovate regardless of market conditions. A well-structured portfolio acts as an emotional circuit breaker during market extremes. By creating clear rules and boundaries for your investments, you are more likely to make impulsive decisions that you'll later regret. The impact of prolonged bear markets on mental health shouldn't be underestimated. Many crypto investors experience chronic stress, anxiety, and isolation. It's crucial to maintain your mental health by seeking support and setting boundaries for your investment activities. Each cycle has been characterized by higher lows and eventually higher highs, reflecting the growing maturity and adoption of the cryptocurrency ecosystem. Understanding this cyclical pattern can provide valuable perspective during difficult market periods. Focus on understanding the fundamental innovations that drive blockchain technology, building relationships within the community, and making strategic purchases during periods of extreme fear and uncertainty. These actions will help you position yourself for the next bull cycle. Many successful crypto investors describe their journey as an evolution from short-term speculation to long-term builder and stakeholder. This transition typically accelerates during bear markets, as investors seek to align their personal growth with the technology's economic potential. Embrace the cycle, guard your mental health, seize opportunities, and develop a comprehensive strategy. Evolve your relationship with crypto from pure speculation to meaningful participation through learning and community engagement. Conduct an honest assessment of your current portfolio and emotional state. Establish a regular DCA schedule that fits your financial situation, set price alerts instead of constantly checking charts, and join a community focused on education rather than price speculation.